Hello, hello, hello. Welcome to my YouTube channel, guys, and welcome to the Fierrrce Forex YouTube series, beginner series. Basically, we've covered 3 modules so far, and right now we're going on to module 4, and we're going to be covering the different types of market analysis. Now, a disclaimer, as always, I am not a financial consultant, nor am I a financial advisor. If you need financial advice, please seek it out from a professional. I'm just here, a trader, sharing what I've learned with regards to the market and trying to add to this space, basically. So that out of the way, let's move on. And hopefully this module will begin to tie in from what we learned in the previous modules. So far, we covered in module 1, 2, and 3, we covered Forex, what basically introduction to Forex, what is Forex, Forex terminologies, and we also covered brokers, and we talked about how to open an account with a broker, demo, and just what to look out for when you're actually wanting to decide which broker to use. Okay, so hopefully if you haven't watched the 3 modules prior to this, please just go back and watch that before you cover this. Yes, so what are the different types of market analysis? We have 3 types of market analysis. We have the first one, which is technical analysis. We also have fundamental analysis, and we have a third called sentimental analysis. So what is technical analysis? Now, basically, what we're talking about when we refer to this is we are looking at charts, okay? We are going to be analyzing, as traders, we analyze, or as technical analysis traders, we analyze or study price charts of Forex, price charts of stocks, price charts of whatever asset you want to buy or sell in the market. Okay, so these charts are basically visual representation of what the price of a currency or an asset is doing at this particular point in time or over a period of time historically. So basically you can use the charts to anticipate where to get into the market and where to get out of the market. Now, you can think short term, you can also think long term, or medium term. Using the charts, you can study them. So technical analysis is just the study of price action. You're looking at price movements vis-a-vis time, and then it also involves the use of technical and indicators to assist you in your study of the chart and just to help you to further understand what's really happening with price. So technical indicators may be tools like moving averages, relative strength index, which is the RSI, and many others. Okay, so for the purpose of this class, I will just focus on the basics of price and time, okay, in terms of the technical analysis bit of it. I personally, as a trader, do not use technical indicators, so it will not be the focus, but I will share resources of where you can actually go and study technical indicators. And one of the big resources is babypips.com, which has been there since I first heard about Forex, I think in 2006 and probably earlier. Okay, so that's technical analysis. We study charts, price charts of different currency and assets. Okay, now in the technical analysis bit, there are different charts that we analyze. There are 3 main types. The first one is the Japanese candlestick chart. Okay, and this is basically how it looks. Okay, it shows and this will look more presentable once we open a proper chart, whereby now you're going to be looking at different candlesticks, and you'll be able to see the direction of price and things like that. So here it may not make a lot of sense, but this is basically the anatomy of this candlestick. So this is a candlestick. So think of a real candle, okay? And in a real candle, which there's the body of the candle, and then there is the wick of the candle. Okay, so this would be the body, this is the body, and then this would be the wick of the candle. Now with Japanese candlesticks, basically, we have wicks, we can have wicks on both ends of the candlestick, okay? So this is what actually makes a candlestick. And we have up candles that signify the movement of price up, and we have down candles that signify the movement of price down. So the Japanese candlestick shows you the open the open price, okay, where price opens up when the market opens or when a specific time frame begins, because you can study these charts on different time frames, on a 1 minute time frame, 2 minute time frame, all the way up to a 24-hour time frame, a daily time frame, weekly and monthly time frame. So depending on the time frame, every candlestick represents a specific time frame, and within that time frame you have the open price, where the price, the market, or the price of that asset you're looking at opened at that specific time. We have the close up here. Okay, so this candlestick opened here and then price moved up. Okay, and this is where it closed out. And then we have the low of the price, okay, of this candlestick. And this low is represented by this long wick here, which this is the last point of this week. So this is the low. This was the lowest that the price ever reached at this particular point in time. And then we have the high on the candlestick. This is the very high of this candlestick range. Okay, so we move from the open, we see price moved down, but then it then moved up, and then it moved higher up here, but then it closed down here. So when it closed, it left this wick here. Okay, so that is how the wicks are formed. And we'll study that as we go along. So basically, this is an up candle, okay, because price is moving from this low to this high. Okay, so from this low to this high, or from this open to this close, basically it's moving up. So that's why it's an up candle. The opposite is true for a down candle. So you can see that the price opened here, and then at some point it pushed up. Okay, so this was the high of this candle. Okay, and this candle, like I said, can represent any time frame, a 1 minute candle, a 2 minute candle, or even a 5 minute candle, and we'll see that on the chart itself. And so from this high, it went down and formed this low here, but then it didn't stop here. It then pushed back up. And then finally, by the time this candle time frame was ending, let's say if it's a 1 minute candle on the 60th second, this is where the price was, and this is where it closed out. So you can see from this high to this low, we are moving down. And so this is a down candle. Now, depending, don't mind the colors, you can have this in different colors. You can have it in black or white. It doesn't matter. The colors don't matter. What you need to understand is the anatomy of the price of the candlestick. Okay, so down candle moves from high to low, and up candle moves from low to high. Okay, so that's the first type of candlestick, and it's usually one of the most popularly used charts for analyzing the market by most retail traders, including myself. I don't trade with any other type of chart. This is the one I actually look at most of the time. Now, next we have the bar chart. Okay, and yes, here's some reading resources for the candlesticks if you want to read more and study this charts a bit more, because I'm not really going to cover the nitty-gritties of the charts, because there's a lot of free resources online for you to do that. We have the Japanese Candlestick Charting, which is a book by Steve Nissen, and you can find it on Amazon. There's a Candlestick Bible by Munehisa Homa, which is you can find it a free PDF online as well, so you can study. I recommend you find these books and study them. Okay, study them to learn more about the history of the Japanese candlesticks, how they are used, and so on and so forth, because I don't need to cover it here. It's one of those things that you can actually just read for your own additional knowledge. So yes, so that's the first type of chart. Then we have the second type of candlestick, which is the bar chart. Okay, now the bar chart is also usually used a lot by stock traders, and you find that this is how it looks. So it's slightly different from a Japanese candlestick in the sense that it looks different. However, it's the same concept. It has a high, it has an open, a high, a low, and a close. So how do you know this is a bearish? When I say bearish, so there are two types of ways that price moves. Price moves up or down, or it moves in a bearish or bullish direction. So if it's bearish, it means it's moving down. If it's bullish, it means it's moving up. So how do you know on a bar chart that this is a bearish candle? We know because the open was up here, the high was here, and the low is below here, and the close is here. So that's how we know this is a bearish candle. How do you know this is a bullish? The opposite is true. The open was here, the low was down here, and then it moved up, and then this was the close. Okay, so that's basically how, you know, and these were the highs of the session on this bar chart, and this is the lows. Okay, so a bar chart is technically not a chart, but it's just a representation of data represented by these sticks here that we look like bars. Okay, now that's the second type of chart that you may want to interact with. And you can read more about it in this book called The Bar Chart Basics. Okay, Big Returns by Darrell R. Jobman. So again, you can find this on Amazon. I'm sure you can find a similar resource as well online, but I'd suggest just read it for your own, again, understanding of how bar charts are used and their purpose. Okay, then we have the last and final one, which is a line chart. Okay, and that is self-explanatory. This is a graph. I mean, we even use this in mathematics in school. So basically, this is a line graph. You can see it clearly. Price is moving up, down, and so on and so forth. So it's a very simple and plain chart. But what is nice about the line charts is you can literally tell the trend of the market, or what we call the direction of the market. It's easy to tell. Price is moving from here, it's moving up, it moved down, it moved up, it moved down. So it's easy to interpret in that sense. Okay, very, very simple chart. So these are the main three charts that we use. For the purpose of my beginners Forex YouTube series, I'm going to focus on the Japanese candlestick chart, but in the sense of just looking at the chart and focusing on how you can begin to interpret it. I will not cover the history and all that. Please read the resources shared earlier. So that being said, that's the first type of analysis, our technical analysis. We're just looking at charts and trying to look at visual representations of data that we can then use to trade. The second is fundamental analysis. Okay, so what is fundamental analysis? Now, fundamental analysis has to do with economic, social, and political news data. Okay, basically, it's a study of underlying forces that affect a financial product. So I'm just going to make it look at it from this. We have what's happening in 2022 now is the fact that we have Russia that is invading Ukraine, or has invaded Ukraine, and there's this war that has broken out between the two countries. And what we saw in the last 1 week, or since Russia invaded Ukraine, is, first of all, the Russian ruble dropped significantly. We find that countries in the West decided to begin to sanction Russia in different ways, and as a result, the markets have been a bit interesting, quite volatile, and so on and so forth. The price of oil, for example, has gone up significantly because of this war. We know that Russia is a huge exporter of oil. So obviously, if they're at war, there's a lot of problems, and if there's no movement around in terms of the airspace and things like that, a lot of other things are affected, thus affecting the currencies of these countries. Ukraine is being bombarded, so that's where we are at. Ukraine probably in its currency maybe having issues, because there's war. Okay, so that's fundamental analysis. You analyze what is happening outside of the technical data that we see on the charts. Okay, so again, social, political, economic. So this may also cover, outside of, let's say, natural disasters like wars and things like that, we have now interest rates, we have GDP of a country. How does the GDP reports that come out annually affect the currency of a country? How do employment numbers affect the currency value, or the value of a currency or of an economy? And then we have financial documents that are always released, press releases. You may find that governors of these central banks of specific countries may be giving their reports of the financial year and things like that that may affect the currency of that economy. And those are the things you study so that you can begin to make an informed decision about what may likely happen to that currency. Okay, and then we also saw during the COVID season, for example, there's a lot of printing of money by the Federal Reserve Bank, which is basically the US central bank, vis-a-vis, Kenyan central bank, so they call it theirs, the Federal Reserve. And we found that that also affected the dollar at that particular point in time. You know, because of COVID, again, economies were depressed kind of, because people are not employed, they had to stay home. So, you know, a lot of, you know, things like possibly businesses suffered. How did that affect the dollar? People are not spending as much. How does that affect the currency, and so on and so forth? So that is fundamental analysis. Now, the difference between technical and fundamental is very simple also, in this sense that with technical analysis, you're looking at shorter time frames. Okay, maybe intraday time frames, maybe daily, but with fundamentals, you can think about a currency or an asset moving, appreciating up, or going or depreciating over a long period of time, in terms of maybe, or you can say this asset is bullish this year. Fundamentals help you to figure that out. Okay, so it's more longer term. Okay, in terms of more, in fact, in terms of its effects, like even the effects of war, war are long term compared to technical moves in the data that come, or technical moves in the market, yeah, on the charts as we see it. Okay, so that's fundamental analysis. And you can read this book as well, called Forex Fundamental Analysis, Trade Forex Like a Fund Manager, by David Carlisle. Again, I will leave the link in my description on this channel and on this below this video. So feel free to just click on that and get access to the book. Then we have the third type of analysis that I've mentioned earlier, which is sentimental analysis or sentiment analysis, depending on where you're coming from. And as the name suggests, this is just basically based off of people's opinions of the market. Like, what are traders feeling is going to happen in the market? To give you a typical example, people who trade cryptocurrency, for example, there's a lot of opinions usually about what is happening with crypto, what is happening with Bitcoin, what is happening with Ethereum, or the metaverse, NFTs, and so on and so forth. So you find that that usually influences how traders also make decisions. For me, what I've learned as a retail trader is, with sentiment, it's opinions. Okay, so it's not really fact, it's not like data driven. It's more so like, what are traders feeling? Like, I feel today when I look at the charts, maybe euro is going up. But also we have tools that can actually help you to gauge the market sentiment or opinions of people. Now, one thing you also need to note that, which I've pointed out here, 70 to 80% of traders are going to fail in trading, okay, as traders in Forex trading. Okay, this, like I said earlier, the market is a very risky market, okay, very volatile. And a lot of the time, people are losing money in the market. That is the reality on the ground. So also, I'm setting the right expectations so that when you come on board, don't think this is going to be a get rich quick kind of scenario. You have to apply yourself to understand what is actually happening in the market. Okay, now, since this is the case, that 70 to 80% of retail traders fail, now if 70 or 80% of traders are taking a certain position in the market, that means common sense dictates that you do not want to follow the majority, because then you'll also be failing. Okay, now so there are sentiment indicators, okay, that you can actually use, and the ones I recommend is, there are two of them, two tools, sentiment analysis tools. And the first one I recommend is the IG client sentiment, that is found on dailyfx.com. It's pretty clear. It shows you where buyers are buying, where sellers are selling. So where they are longing and shorting the market. By long, I mean buy. By short, I mean selling. Okay. Then we also have the commitment of traders report. So let me just also mention about the it's called what, the IG sentiment. So most of the time, it's basically, it's you when you go to on daily FX, you'll be able to see, like I said, the long and short positions in the market, and you'll be able to see it very clearly. Okay, you'll be able to see how, for example, Euro GBP is positioned in terms of client positioning. Where are the traders? And then you'll be able to, this tool is just based on, it's a graphical, numeric or graphical representation of how optimistic or pessimistic traders are about market conditions. Okay, so it's a very, very useful tool that you can incorporate. Okay, and like I said, I don't want to repeat myself, but you can find it on Daily FX. Then when it comes to the commitment of traders report, or the COT report, okay, this report is published weekly by the Commodity Futures Trading Commission, which is the CFTC, and it's compiled from submissions from traders in the commodities markets, which gives a picture of the commitment of a certain group of traders. Okay, now this report is pretty good, okay, because we are talking about now a lot of the, most of the people who trade commodities are more so the huge commercial traders. Okay, it's retail traders, we tend to maybe trade more of Forex, indices and things like that. But now when it comes to heavy commodity trading, trading of wheat and livestock and different types of metals, and like outside of gold and silver, there's palladium and all those, you find that there are huge commercial traders who trade. And because we know, and I said in previous class, that the commercials are the ones who move, commercial traders are the ones who move the markets. Okay, so you really want to know what the commitment of the commercial traders is like where are they long, where are they short. Okay, so I recommend you can actually see this report. You can go to barchart.com, and you can access the commitment of traders report. Okay, now, so those are the three types of analysis: technical, fundamental, and sentimental. So that brings me to the end of module 4. Up next, module 5, and we are going to focus on the charting software tools that we use, and we are going to start with MT4 and MT5, and I'll take you guys through how to use that tool, because I'm assuming you've already at this point in time opened your demo and live account. If you haven't, please do, so that this class or module 5 will make sense. And that's it for today, or for this session. See you soon, guys. Bye-bye.